Hey guys, it's James, and in 2022, I want to do a finance battle or a stock battle on M1 Finance. I really like the way M1 Finance is set up, and we'll talk about M1 Finance here later on in the video. But what I did was I purchased a bunch of REITs, covered calls, S&P 500 ETFs, and Nasdaq 100 ETFs. This right here is also ETF, so it's covered called ETFs. Let's go over to my spreadsheet tracker. So I have bought 5 different ticker symbols or in each category. I've bought 5 different companies in each category: the real estate investment trust category, covered call ETF category, S&P 500 ETFs, and the Nasdaq 100 ETFs. So in the REIT category, first up we have American Tower Corporation. Next we have Digital Realty Trust, Realty Income Corp, Vanguard Real Estate ETF, and then Welltower Incorporated. The reason why I chose these, this one right here has had a long paying dividend, and I wanted at least in one category something that paid a decent dividend. Now, not especially when you come down to the Nasdaq 100 category, they don't really pay a dividend at all. But that was one of the things I really wanted in the REIT category, was a long paying dividend company to see what we'll get over the course of 2022. So Realty Income Corporation, they own about 11,000 properties in commercial real estate, and they lease the land to large companies like Walmart, Amazon warehouses, and etc. American Tower Corporation, they own the real estate for the communication towers, and I believe they are a global company as well. Digital Realty Trust, they own the real estate where all the data centers are at, and the cloud networks where they store the data for even what we're using right now, Google Sheets. All that's stored on a cloud. You get to access it from all your different devices, and they need a place to be able to store all this data. And Digital Realty Trust probably owns the land, or another REIT just like them owns the land, and they probably lease it to Google. And then I threw an ETF in here. So Vanguard Real Estate ETF, VNQ. It's an ETF that owns REITs, and some of their top holdings are DLR, which is Digital Realty Trust, Realty Income Corp, and American Tower Corp, as well as a broad spectrum across different sectors in the REIT market. And then I rounded out with Welltower, one of the best known healthcare real estate investment trusts. They are focused on senior care and senior care living. So I think this will probably do very well here over the next few years, especially with all the baby boomers needing a place to stay, especially with that group of population starting to age. Come down here to the covered call section. So we have 5 different ticker symbols in here as well: DIVO, QYLD, RYLD, XYLD, and I'm not sure if I've seen this too much on YouTube, PBP. It has actually been around for a lot longer than all of these other funds. So what I did here was I took their 1-year, 5-year, 10-year cumulative returns, and these first 4 funds haven't even been around for 10 years, but PBP has. I believe it's owned by Invesco. You can check out each of their expense ratio and their dividend yields, and then I have an average expense ratio, dividend yield, and each of the growth for each fund. So it's going to be kind of exciting here at the end of the year, or at the end of each quarter, what these are going to come out, what's going to come out at the end. What I would like to do is to do weekly updates. At the slightest, I would like to do at least monthly updates, but I will try to keep it tracked here on my tracker. We're going to go out per week, then we're going to take each fund and then start to graph them and then see where we are at. But let's go back here and finish this. So we have DIVO, which is an enhanced dividend income by Amplify. They basically buy the S&P 500, write options on it. The QYLD buys the Nasdaq 100, they write options on it. The Russell 2000, S&P 500, and then S&P 500. So there's 3 different S&P 500 option writing ETFs, if you will, in this collection that we are going to analyze. But we also have one for the Nasdaq 100 and one for the Russell 2000. So I think it'll be also exciting to see difference between DIVO, XYLD, and PBP, different writing strategies, and which fund comes out on top. Let's go down to the next section of funds. We have just the basic S&P 500s. You have your IVV, your standard SPLG, SPY, and then you have a few Vanguard funds. You have their growth, S&P 500 and then the value S&P 500. So what's the difference between a growth and a value? So VOOG holds close to 50% in the tech sector, and then compared to other indexes, S&P 500 indexes were 25%, like the VOO. I believe 25% is in the tech sector. So VOOG tracks S&P 500 but holds more weight in the tech sector. So VOOV holds significantly more of their portfolio in long-term companies such as JP Morgan, J&J, Disney, Exxon, Pfizer. I don't believe they have. I'm sure they have. I haven't checked, but I'm sure they have Apple and Microsoft, but that is not at the top of their percent of holdings. So if you take a look here, just between VOOG and VOO, VOOV is going to have more of a dividend payout because you have longer term companies that probably have a solid dividend payout, but the growth is not going to be that much because these companies are not growing, they're just holding. Take J&J, for instance. They own the rights to Tylenol and Band-Aid. Things like that in the market aren't really growing. There hasn't been a higher demand for those things, but it's been a long-term company where they give some of the profits in dividends. But we're not talking about stock analysis here. We're just going over these funds here. But that might be a reason why we see a difference here between VOOG and VOO. So then VOOG, you see a lot more growth because it's in the tech sector. But let's move on to the Nasdaq 100 ETFs. So first one up is QQM. So QQM and QQQ are almost, I believe they're exactly the same, but QQM, the price was lower and it was made for the buy and hold investors, not the investors that get in and out, where QQQ would be those that would do that, maybe for like day traders who are trying to see the price spike and then sell it, and then maybe if it drops they buy it again and then sell it and buy it. So that is the difference between QQQ and QQM. QQJ is they are tech heavy, again 50%, but they're tech heavy on the mid cap companies instead of the large cap. Large cap is like your Apple, Microsoft, Tesla, Amazon, but they are holding mid-cap companies. So things like, I think their largest holding was a company called Fortinet. I didn't really recognize any of their holdings, QQJ, but maybe we'll do another video and analyze each and every one of these funds and see what is in here. But for now, we're just going to run through it real quick. This is week number 1. We're going to set the basis and we'll go from there. And then the bottom here, we have a few leveraged funds. QYLD is a leveraged 2 times, and TQQQ is leveraged 3 times. Basically, in very basic terms, they use debt to try to beat the market. When the market goes up, you go up twice as much or 3 times as much, but when the market goes down, you go 2 to 3 times lower in the market. You can see the massive gains here over the cumulative gains over the past 10 years for TQQ, 11,000% cumulative gains. So this is going to be pretty interesting to see how this performs compared to all the other funds in this portfolio. So my idea was to buy $1,000, so $50 in each fund. There's going to be 20 holdings. The reason why, I'm not really sure why all these funds are slightly below when I purchased all these things on M1 Finance. I have 20 positions. For some reason, the buy price did not buy right at $50. I'm not sure. I could always reset or rebalance my portfolio. You can come over to your portfolio main page, rebalance, add a little bit in to try to get to $1,000, rebalance it, and all your targets, your percentage targets will hit their target number. So I did each one weighted equally, all 5 REITs at 25%, all 5 covered calls at 25%, all S&P 500 ETFs and Nasdaq 100 ETFs, all of them at 25%. And if you click on each and every one, each one is 20% inside the 25%. Over on the chart here, what I would like to do is every week put in the final numbers. So on January 8th, we're going to put in some numbers here, and I would like to do an update video and show you what we get for each and every one. And then what we're going to do here on this graph, we will compare each 5 REITs compared, and we will go along the year and see where they track and see which one gets better and which one gets worse. Maybe you guys would even like to buy some of these holdings as you watch this series. Then we have the covered calls down here. Same thing, we'll add in the numbers and track them over the course of the year. The S&P 500 and then the Nasdaq 100. And on the last page here, we have the overall. We're going to track how REITs do. All those 5 REITs, covered calls, S&P 500, and the Nasdaq 100. And I'm going to try to keep the color codes here the same across the sheet. So just to give you kind of a little example what this is going to look like, let's say the REITs do fairly well here in the month of January. 260. Let's go down to the next week. Let's say it gains another $10. Let's say it slides a little, and then we have a huge spike. It's not going to happen. Let's say it just goes like this. So we started at 250. What's going to happen is we'll track the REITs and see them go up. So we'll go 400 and 600. Obviously, this is not going to happen in 4 weeks. So you kind of get the picture here. We'll get to see the difference between these 4 different buckets of funds. Let's go over to the M1 Finance website. So M1 Finance, actually, if you sign up today, I believe they are still running their $50 promotional. If you sign up, you'll get $50, and then I'll get $50 as well. So if you guys have not signed into M1 Finance, it is a very powerful investing tool. It allows you to break up your investments in percentages, that as we have seen, and you can also invest in multiple different accounts, which I really like. What I would like to do is open up either a Roth IRA or a couple of custodial accounts for my kids, put in maybe $25 a month for each of them, and they'll have quite a bit of money here when they graduate high school in about 10 to 15 years. So that would be kind of cool to be able to do that and track that. So you can open up an individual investing account, which is what I do. You can open up a joint investing account, multiple different retirement accounts, tax advantaged accounts like a traditional, a Roth, or a SEP IRA, or you could roll over any of your existing 401k from another brokerage. Or you can open up an investment account for your trust. So that's one of the reasons why I like M1 Finance. You can open up multiple different accounts and switch between accounts. So that is pretty cool. I like the way that they break down the different funds. It's very easy to use and to be able to see and track your funds, especially over here on the portfolio tab. And then if you'd like, let's say all of a sudden REITs start to skyrocket, but you don't expect REITs to skyrocket for the entire year of 2022. Let's say the first quarter they did very well, but then you wanted to rebalance and take those profits from the REITs. You expected maybe your REITs to tank in the second quarter of 2022. Take the profits from quarter one, send them into the S&P 500, or send them into the Nasdaq 100 if you want to be more bullish on some of these other things, and then you can rebalance your portfolio that way. So it's definitely a powerful tool. I think everyone should probably at least have one account in, and if you would like to open an account, I'll leave a link in the description and in my pinned comment, and you guys can open an account. Hopefully you guys are looking forward to this stock battle or ETF battle as much as I am in 2022. Do all that good stuff. Comment, like, subscribe, and thanks for watching.